there really are two types of tax codes in the United States. One is the one for employees, and the other is the one for business owners. And the one for employees is pretty much your tax return has one correct answer. You can buy a home to save some mortgage, get a mortgage interest deduction. You can give a little more away to charity, but for the most part, your return has one correct answer. On the business owner side, there is a whole new world of tax opportunities out there that you can take advantage of. Literally, if you printed out the tax code and I held it in front of me, all the way in front of me like this, and we stood across the room and you had a Colt 45 Magnum and shot it at me, the bullet would not pierce through the tax code and hit me because the tax code is so thick with paper.
Guess what time it is? It is tax season, everybody's favorite time of the year. But it is also time for us to release our episode with Tyler McBroom. This man is a tax extraordinaire. The amount of knowledge he has is incredible. He's partnered with the likes of Tony Robbins, spoken on Business Mastery Stage, and his most recent book he dropped became an Amazon bestseller virtually overnight. If you haven't checked out the book, make sure to check it out. I'll drop the link in the show notes. But let us know what is the biggest takeaway you took from this episode down below in the reviews. Drop us a 5-star review. We grow only by the grace of you. And let's get started on this, because I know we can all learn a lot more about taxes and how it can benefit us in the business and entrepreneur space.
Perfect. So we are back with another episode of the Dedication to Excellence podcast. And today we are going to help you step your financial game up levels. We got CPA and entrepreneur Tyler McBroom in the virtual building, who helps entrepreneurs save on taxes, increase profit, maximize cash, and who is the tax and CFO partner of a gentleman you may or may not have heard of by the name of Tony Robbins. He also has a book coming out very soon, next week, I believe, Cash Flow and Grow, which I'm already excited to read just by the title alone. Tyler, welcome to the Dedication to Excellence podcast. Thank you for stopping by.
Yeah, thank you for having me. I'm excited to be here and dive into some conversation.
Of course. And definitely all this information is crucial if you are running a business, and we will be getting into it. But before we do that, would love to hear the backstory, what made Tyler, how you were brought up and how you got into the CPA and tax world.
Yeah, absolutely. So I grew up, it's sort of the family business. My dad's my business partner and started his first firm when I was 3 months old. So you could say I've been kind of in the tax world since I was born.
A part of 3 months old. Aisha got some catching up to do, Dustin.
Yeah, that's right. But that being said, so I kind of grew up like when we were going on ski trips with my dad's friends who were clients. I'd hear tax strategy talks and all that and free tax advice. But actually was not interested in pursuing this as a career at all, and went about as far away from it as you can. And my degree in college was actually in creative writing. And so I wanted to, kind of write movies, write novels, do all that. And then
your parents loved that when you told them, huh?
Oh man, big time. Yeah. And then and when I was in school, it was kind of the run up before the big 2008 crash. And the general wisdom at the time was it didn't matter what degree you got, you could still get a good job just as long as you had a degree. And that works in the hottest, running economy of all time, to that point. But then when there's this big correction, no one really wants to hire an English major. And so I got tired of being broke and went back to business school. Thought I could kind of use my English degree and marry it with the business master's in business, and went into marketing for a little bit. Realized that the quote sexy jobs still require you to sit behind a computer for most hours of the day, and that really the life I had as a kid growing up with my dad as a CPA wasn't so bad. And so kind of got back into the accounting world, worked for another just kind of company as an accountant, and then got a job at a CPA firm, studied, got my CPA license. And then when we had our first daughter, who's 6.5 now, realized we wanted to be close to grandparents, and had the opportunity to kind of go work for my dad and be partnered with him and take over the firm. And so then I ended up being, an employee of Measure Results, which is my firm, my dad's firm right now. And he said, I don't want to take a cut in pay to bring you on as a partner. So let's grow this thing. And I said, okay, let's do it. And we've been growing about 50% per year ever since. And this last year, since COVID hit, we've been about 100% growth year over year. So we've been on fire. It's been fun. Knock on wood.
Nice. I love it.
Yeah.
So what were some of if we could take it kind of back, since you did grow up in the environment, which I can appreciate because my mom actually is an enrolled agent.
Okay.
So I grew up around taxes and real estate and all this. And like you as a kid, I think we oftentimes take for granted what our parents do until later on in life. We realize, maybe there was some merit to all those lessons they were trying to teach us.
Yeah, exactly.
What were some of the early lessons in finance that, I guess, fortunately for you, being around that environment, you were able to internalize at a young age that you've now been able to pass on to entrepreneurs?
Yeah. So I would say one that is maybe surprising, you hear pay yourself first and live by a budget, and something that my dad was always a big proponent of, which actually I think probably if you follow Grant Cardone, he's in the same boat of, a budget, a hard line by line budget is sometimes it depends on your personality type, but can be overrated. As long as you're paying yourself first, whatever you do with the rest is, totally up to you. So instead of needing to only spend $200 a month on restaurants and then, allocate a certain amount towards clothes and a certain amount towards vacation, as long as you're putting 10 to 20% away for your financial future, whatever you do with the other 70 to 80 to 90%, have at it. So that was one. And then it's funny you mentioned your mom was an EA. I did a podcast episode a couple of years ago now, but it said, if you grow up in the family business, you've got like 10 years of experience on anyone who's just starting out. So just the idea and the mindset that there is something you can do about your tax bill if you're a business owner, just because hearing those just conversations going up the ski mountain or hanging out over at the house when they were having friends over for margaritas on Friday night, here they would naturally just chat about business, and I would hear those things, and I didn't even really absorb it at the time or at least didn't realize it until after the fact. But just that knowledge in the back of my mind, when I got to business school, I had so much more on the people that were in there just around the stuff, just from hearing it over and over. So
what are some of those common things you would hear, some of the common tax struggles that everyday business owners are dealing with?
Yeah, I mean, the first one is that there really are two types of tax codes in the United States. One is the one for employees, and the other is the one for business owners. And the one for employees is pretty much your tax return has one correct answer. You can buy a home to save some mortgage, get a mortgage interest deduction. You can give a little more away to charity, but for the most part, your return has one correct answer. On the business owner side, there is a whole new world of tax opportunities out there that you can take advantage of. Literally, if you printed out the tax code and I held it in front of me, all the way in front of me like this, and we stood across the room and you had a Colt 45 Magnum and shot it at me, the bullet would not pierce through the tax code and hit me because the tax code is so thick with paper.
Amazing and terrible all at the same time.
Yeah, it really is. But that means how much opportunity is there to take advantage of that. So the first thing is, if you're a business owner, that's one of the biggest perks of being a business owner. So the first thing is, if you're not taking advantage of that by doing proactive tax planning with your CPA, you're missing the boat. And so just having that knowledge and that mindset from ground up is huge. I've been on the payroll since as long as I can remember. So getting your kids on the payroll to save, 12, now it's 12 grand a year tax free. Actually, it's like $12,600 tax free per child is a huge.
How does that? Because I've heard of that strategy before, hiring your kids specifically. How does that work, and why is that advantageous?
Yeah, so the IRS has a rule that says if you pay your under 18 children from a sole proprietorship, then you don't have payroll taxes on those wages. And this is actually where a lot of CPAs know you can get payroll, but where they get it wrong is they pay straight from a corporation, and then you have payroll taxes on that. So if you've got an S corporation, you can take the most advantage of this by setting up a sole proprietorship that's like a labor management company, and then transferring the money first to that and then to your kids. So the rule, under 18 children, and you pay from a sole prop, and there's no payroll taxes. On the flip side, an under 18 child can earn up to, it's around 12, I believe it's 12,600 this year in 2021 dollars per year, and pays zero federal income tax. Now, depending on the state, you have a few bucks of state income tax, but you still get $12,600 totally tax-free on the federal side. And so so if you get, if you have 2 or 3 kids, say 3 kids times 12 grand and change each, that's a $37,000 a year tax deduction that you get, and they pick it up tax-free. Now, key is, 1, you actually have to pay them, and 2, they actually have to do something to earn that wage. Mm-hmm. So you pay them by opening up a checking account in their name, you run it through your sole proprietorship, and then you pay them and make sure you're actually depositing money into that account. On the actually doing something to earn that wage, you might say, if you've got young kids, well, hey, I've got an 18-month-old. What the heck can they do to earn 12 grand?
Marketing material.
Exactly.
I've got a 4-month-old. What is
there? You go. Well, I'm sure that so what we have a lot of our clients do is we hire them as models. And the prettier the baby, the more you can charge, right? So
you've got your retirement plan, man.
Yeah,
she's
there
the
we
driver,
go.
baby, man. That's
yeah,
great.
And so people make so much money these days off of social media and website, and people want to do business with a family man or a family woman. So you set them up on $1,000 a month salary for a retainer to take pictures and be a model for your company, and that's how you do it and justify it. So, and if you really, really want to set them up, you pay the $12,000 into their checking account, and then you open up a Roth IRA in their name, which is usually with after-tax dollars, but this is tax-free money because of the way that the standard deduction
Mm-hmm.
works. So you can put $5,500 a year, basically tax-free, into a Roth, invest that money, it grows over the next 16, 18 years, and they'll be sitting really, you can pull that out for education if you want, or just let it continue to grow, and they got an amazing nest egg, and what a gift for your kids.
Mm-hmm. Flip it in crypto. Let's go.
There we go.
So I'm sure you speak with tons of entrepreneurs on a daily basis. What percentage of entrepreneurs are fully taking advantage of stuff like this? I mean, I feel like most people are not.
It's tragically low.
Yeah.
I mean, we talk with, probably I'd say 25 to 30 new business owners a week. And then it's even more, during the business mastery events with Tony Robbins, it's closer to, near 1,000 in a couple weeks time. And literally, I think less than 1% have it all dialed in, in terms of something that we can't find to save taxes. Now, I'd say maybe there's 10 to 15% that we've met with that have done some sort of entity planning or actually done this, but it's way too low.
Let me ask you like this. If you were to grade just the general population, A, B, C, D.
Yeah. It'd be an F minus. I mean, most of them, no, I'm serious. Here's why. So
it's even worse than I got in school, and I had it pretty bad.
Yeah. Well, most people start a business because they are really, really passionate about doing something, or they're really good at a specific trade. Mm-hmm. Let's say they are, they have this t-shirt brand and they want to sell t-shirts because they've got a slogan that they really love and they believe in. Sure. So they start making some t-shirts. They have this, what you call an entrepreneurial seizure, and they start this new company. Well, most people, if they've worked in retail for the last 10, 15 years, and now they're selling their own clothes, when they were working in retail at Abercrombie and Fitch folding t-shirts, they didn't learn how to reconcile a bank account. They didn't learn how to balance a balance sheet. They didn't learn how to manage their cash flow. They're just trying to fly by the seat. They're still just trying to sell t-shirts. That's why so many of them are just focused on that top line. What matters is the bottom line and the bank balance in your bank account, the cash in your bank account. And so that's why I wrote the book, cash flow and grow, because no one knows this stuff. They're starting a business, and it's just even if you go to business school, there's very, very little tactics that you learn that are like real raw entrepreneurship tactics in terms of from the financial side of it. They teach you how to manage the budget of a big old Fortune 500 company, not do the granular stuff that matters, for a small business owner. And so that's why it's not their fault. They just don't know what they don't know.
Sure. It almost makes you wish they'd, teach us stuff in school or something crazy.
Yeah. Well, and I think that's why, like, my audience on, Instagram and YouTube and all that, I get so many DMs thanking me for the content I'm putting out. Like, usually you got to go pay, hundreds of dollars an hour to a CPA, and we're all busy. And so they don't get this information.
Oh, so you were able to use your creative writing skills in your...
Yeah, actually, that ended up being the roundabout way that, kind of made me unique in the industry, for sure.
Hell yeah. So what are some of these other cool tactics besides hiring your kids that I'm sure you speak about this more in the book. So there you go.
Yeah.
Buy his book if you haven't been sold on it already.
So another tactic just from tax strategy side of things is using a rule called the Augusta Rule. That's it allows you to rent your home up to 2 weeks a year tax-free and get tax-free money out of your business.
Tell me more.
So what's that?
I said, tell me more.
Yeah. So the IRS has a rule that says that if you own your home and it's your principal residence, you can rent it up to 14 days per year tax-free. And what that's meant for is, let's say you go out of town on a trip. Out here in California, we're mostly shut down. So if we wanted to go to an open state right now for a week,
Boise,
and get part of that trip paid for, and we put my home up on Airbnb and someone rents it out for a week to get part of that trip paid for. The IRS says, if it's under 15 days a year, you're not really in the business of, renting that out for your income. So we'll just give it to you tax-free. So what we have our clients do is we have them hold a monthly shareholder board meeting at their house and rent it out to their business for the use of their house for that board meeting. So once a month, you hold a meeting with me, myself, and I, and it works really well if you have a split personality, which most business owners do. They're always talking with themselves about their business. At least I am all the time. So now we're just getting tax-free money out of your business for doing it. And so if you're home, to kind of use a rule of thumb as far as how much to rent it out for, there's two methods. One is quick and dirty, which is it's 0.1% of the value of your home. So if your home's worth $500,000, you knock off the 3 zeros, you're $500 per meeting times 14 days per year is $7,000 tax-free out of your business. The other kind of more homework way to do it would be to find some conference rooms for rent in your area that are about the same square footage as the common area of your home, and see what they're charging for a day, or a wedding venue, and you use that as a rule of thumb.
Go find the most expensive real estate around you.
There you go. Well, we have, our clients that are in, kind of Nebraska and the Dakotas and kind of the middle America get a few grand a year tax-free out of this. But our clients who are in, San Francisco, New York, it's where a Cracker Jack box costs you a couple $1,000,000. Yeah, they're getting $20,000, $30,000, $40,000 a year out of their business by utilizing this.
So I'm right next door to the Salesforce tower. I wonder what the top floor conference room goes for.
It's probably I'm sure this is pretty good little strategy for you.
Okay.
So, yeah.
Please keep the tips coming, man. These are great. These are like quickly digestible, like actionable items. I love it.
Yeah. And so the last sort of easy one that you can take advantage of today without really talking, you still want to talk to a professional on all of these things, but is making sure you have the right entity structure. So this is really, so we have a lot of real estate agents as clients, and so many of those, and this is true if you're just kind of getting started out, or if you've worked as a 1099 and never really thought about entity structure or what should I do. There's a thing if you're a sole proprietorship called self-employment tax. And if you first start making money in business for a year, in the first year you make some real money, and you haven't looked at your entity structure properly, you get a whammo of a surprise when it comes to tax time. Because self-employment tax is an extra 15.3% on top of your income tax on the first $133,000 of your income. So it can be something like $26,000, $27,000 on your income. And that's all well and good, because what self-employment tax is it's your portion of Social Security and Medicare as a self-employed individual. So when you're a W-2 working for the man, you get your paycheck, and let's say you make $5,000 a month. Well, you don't take home $5,000 each paycheck, right? Mm-hmm. So if you look at your pay stub, you have an amount taken out for income tax, and then you have an amount taken out for Social Security and for Medicare. Mm-hmm. If you add up the Social Security Medicare portion, it ends up being about 7.5%. And then what happens is your employer matches that and sends 15% to the IRS. That's called payroll tax. Well, when you're self-employed, that's how they fund Social Security programs and Medicare programs. When you're self-employed, there's no one to withhold that 7.5% on the first half. There's also no one to match it on the other half. So but the IRS still wants their 15%. So you're left holding the bag for that whole 15%. Meanwhile, your vendors or your customers who are paying you aren't withholding anything from it. So it ends up being a big old surprise. And so by forming an S corporation, you can pay yourself a reasonable but low salary and save 15% of the difference. So let's say you make $100,000 and you form an S corp and pay yourself a $40,000 wage. You save 15% of that $60,000 difference, or about $9,000 a year, just by filing one extra tax return. And so that was a lot of numbers.
That's when you hire yourself, right, under your own.
Yeah. So you pay yourself you form an S corporation, you pay yourself a salary.
Yeah.
So you're taking a W-2, and then but that doesn't mean you have to live on $40,000 now all of a sudden. You just take the rest as a shareholder distribution. And so that's one of those things where definitely like talk to your CPA to see if it makes sense. And it's usually in most states a break-even point on when it makes sense is about $60,000 to $70,000 of net income on your business. In terms of the tax savings being more than the extra cost of having it.
Okay, so that's how that works. Because I've heard that it comes full circle. You start off as a W-2, and then you go and become self-employed, form a corporation. Mm-hmm. But then you kind of circle back to being a W-2 as your own employee.
Right. But you want to pay yourself as low of a wage as possible, because the way that the Social Security program works is on the first $15,000 of your wage, 85% of the taxes you pay are going into your actual Social Security bucket. Mm-hmm. And then it drops a little more as you go up. And on everything above $45,000 of salary or of net income on a sole prop, only 15% of the tax you pay is going into your actual Social Security account. The others, 85% is going into the Washington Fund Money Fund. And so you break even on Social Security at about $40,000 a wage. And so that's why so you're just throwing money away above that.
These are those specifics that just make all the difference.
Yeah. And so, but you gotta have a reason, you have a reasonably justifiable salary. If you're a doctor running a practice that's a $3 million practice, it's hard to say that you'd pay yourself $30,000 if you're replacing it.
Yeah.
Interesting.
So those are some good quick tax.
So in conclusion, sit down with someone like Tyler. If
that's right.
Yeah. And buy his book.
We mentioned a big name right at the beginning, Tony Robbins. I'd like to kind of take a step back and figure out how it came to be that you got into partnership with business with the Tony Robbins. I'd love to hear that story.
Yeah, definitely. So I became business partners with my dad in August of 2016, and it was kind of humming along, nice lifestyle business. And he said, if I'm going to bring you on as a partner, I don't want to take a cut and pay. So let's grow this thing. And I said, okay, let's grow this thing. And so we started growing and kind of putting ourselves out there and giving speeches and adding value and doing a lot of these kind of tax tip type of things to real estate offices. And then I joined a couple mastermind groups. And through one of those mastermind groups, the guy who was running it saw a lot of what I was adding value in the group and wanted me to run a 13-week tax and personal finance course. And about half the group was Canadian. And so I wanted to bring in a Canadian CPA to share some Canadian tax tips during that portion of it. And I reached out to this other, CPA group that I was in on Facebook. And the guy that I got connected with happened to be the Canadian version at the time of the Tony Robbins Global Accounting Advisors program. told me about the program. I said, hey, that sounds like fun. That sounds like something I'd like to do. And so he told me the guy's name is an Australian gentleman he's the Australian partner, Paul Sidorowski. Told me his name and his email. And so we cold emailed Paul. And we said, hey, Paul, here's what we do. Here's how we add value. We're really, I think, would be strategically aligned. We'd love to chat and see if it makes sense. And so he said, great. Are you free on this date and time? We said, yeah, let's do it. And it happened to be like a Thursday at 10 p.m. at night, our time, because it was Australia. And we put it on the calendar. And then a couple of days went by and we said, it'd be nice if we just didn't have to stay up that late. So my dad emailed him and said, hey, is there any way we can reschedule to be at an overlap where it's, on our days? And he said, oh, absolutely. Or his assistant said, absolutely. And 3 years later, we got our appointment. And I learned a valuable lesson that day of when you get a massive opportunity, do not reschedule it no matter what time of night it is.
Yeah.
So in the meantime, we're still, we're going to grow this thing because we're now a growth-oriented CPA firm. Actually in the opening of the book, I talk about the importance of having growth mindset. And so that didn't stop us. We just kind of pivoted. And that's when I've always had a passion for marketing and social media. And so that was kind of around a few months later is when I really decided to go all in on social media and Instagram. We hired a full-time content guy and kind of started building things. And I would just check in every 2-3 months and say, hey, I've got, a few thousand followers on Instagram. I think we're adding a lot of value. I'd love to chat. No answer. Love to, a couple months later, hey, we're at 10,000 followers now. This is obvious. We're showing a lot of value. Would love to meet. No answer. And then kept plodding along. We kept growing 50% per year over the next, couple of years. I became a member of the Forbes Finance Council, wrote a couple articles for Forbes, sent them along. Hey, this is what we're doing. Can we get a meeting? Just kept going along. And then finally, so it was in April of 2017 when we first rescheduled boneheadedly. And then in early July, got an email from his assistant. Hey, Tyler, are you free to chat on July 22nd for, this was 2019, for 15 minutes with Paul? And we said, yes, don't care what time it is, book it. Yeah.
This time's at 3 a.m. your time.
Yeah, exactly.
Teach you a lesson.
Exactly. And so we jumped on and he kind of said, tell me about your firm now. I know, you gave me the stats on it before, but where are you at? What's your size? What's your numbers? And we did, and then kind of through some basic quick due diligence. And he said, hey, if you can get on a plane to Vegas in the first week of August to Business Mastery, the partnership is yours. Ooh. And so we said, absolutely, let's do it. And, I hadn't met Tony or anything at that point, but again, so we went to Business Mastery in August. It was amazing. And then again in January of 2020 in Palm Beach. And then got a call from his CFO, invited to go to his birthday party when he did a big concert birthday party, went and did that. And then COVID hit and suddenly, all leads were drying up, but we said, okay, we're a growth minded firm and still hadn't met Tony at this point, even because his birthday party was a very big event. Mm-hmm. And then leads were drying up. So we pivoted because we wanted to always add value and grow into helping people with PPP loans and navigate that whole process. Mm-hmm. And one of our emails that we were sending out to our audience got forwarded to Tony's CFO. And I got an email from him and said, hey, Tyler, are you free to chat in about 2 hours? And I said, okay, it's Tony Robbins, CFO. I think so. And he said, tell me what you're doing with this program. Sounds cool. And so I did. And he said, okay, awesome. And he hung up. And I said, well, that was cool. I got to chat for a bit. Figured he was just curious from, as the GA partner. And then I got a text about an hour later saying, hey, Tyler, are you free in 10 minutes to jump on a call with Tony, on a Zoom call with Tony? And I said, yeah, I think so.
Move some things around.
Jumped it on. He said, nice to see you. I said, nice to see you too. And he kind of said, talk me through what you're doing here and some options. And we ended up working through, helping them discuss their options on the PPP loan. Tony appreciated and found a lot of value in how I communicated. And that's because I had been putting in the work, talking and practicing communicating on Instagram and social media over the last 3 years. And so he said, I think this would really help a lot of business owners. Let's do a webinar. And in April, we did a webinar to 12,000 people covering all the details of the CARES Act. And then, so Paul is the Australian guy who runs the whole program. Normally, he gives the speech at Business Mastery. He couldn't come out to the United States for the virtual Business Mastery events that he did because of the travel restrictions. And I got the opportunity to throw my hat in the ring. And then so I got to, speak on the stage at Business Mastery with Tony. And so now, he and I communicate on a regular basis and text message back and forth. And, so yeah, that's
a beautiful thing. I feel like you need to make a movie out of
that. Yeah. So it's been a
heroic journey of a CPA.
Right. Well, the fact that, going back to like what I wanted to do, which was be on stage or, be involved in movies and writing books and all that stuff. Mm-hmm. I never thought, I kind of thought when I was going down the tax world that I was just going to be sitting behind a desk crunching numbers, but at least I got a decent paycheck. I never thought that it would lead to me speaking on stage to, several thousand people across 61 countries for Tony Robbins, Nice. But, so I think that if you find and have like a passion, you can find that within whatever it is you do and just keep pushing. You never know when the doors are going to open. Right.
Yeah. I mean, that's that whole preparation meeting opportunity. And
yeah, exactly.
Luck, man. So that's awesome to hear. But hey, speaking of like things like the PPP loan and whatnot, there has been a shift in the American society as of yesterday.
Yeah.
And I saw a piece of your content. I didn't fully dive into it, but you had a piece of content that was dissecting Biden's tax plan.
Yeah.
So what should people be aware of? What is there to look forward to or not look forward to?
I mean, bottom line, taxes are going up. And that was going to be true no matter who won the presidency. When you print $5 trillion, someone's got to pay for it. And, everyone like complains about taxes going up right now, but we are in a historically low. If you look at the evolution of the income tax rates over the last 100 years, we're in a historically low rate right now. The top tax bracket, if you look at 15 years after the New Deal, so after the Depression, when they pumped a bunch of money into the economy, in the 50s, the top tax bracket was 94%. Mm-hmm. And now that was way up here. That was, you had to be making, multiple millions of dollars per year in income to hit that bracket. And there were a lot more brackets along the way. So it's not like, and just to clarify, it's a marginal tax bracket. And this is something that's confusing, that is an area of confusion because you just hear tax rates in the news and people think that just because you get to a 37% bracket, automatically all your money is taxed at 37%. So you don't want to make any more to stay under that. It only means the additional dollars above that threshold are taxed at 37%. That's the marginal tax rate.
Got it.
So the top marginal tax bracket was 94%. But bottom line is taxes are going up. They're talking about getting rid of the capital gains tax rate, which there's a favorable capital gains rate now. So like if you're in the top tax bracket of 37% on ordinary income, mm-hmm. if you sell something for a capital gain, so like a stock or crypto, or then you pay a 20% rate at the top bracket. Most people are paying somewhere between 10 and 15% instead of 24 to 28%. So they're talking about getting rid of that. They're talking about eliminating
or just the upper levels of it.
It would all be taxed at the ordinary income rate.
Got it.
Which out here in the great state of California, it already is anyways.
Yeah, right.
So bottom line, tax rates are going up. You probably won't see much happen this year because if you look at what happened at the beginning of Trump's presidency and they had that overhaul to the tax code, it kicked off as of January 1st, 2018. So it takes about a year to get it through Congress and written out and vetted. So we're probably going to see it be pretty similar this year. but it'll be 2022 where they start to hike it up.
Because the tax code needed a few more pages, right, guys?
Exactly. Exactly.
Fuck, I had a great question that just went.
So while you think about that, so this most recent one that went through 5,000 plus pages through Congress and everywhere. One of the little nuggets that kind of came out to, which was just kind of a handout to the service industry, which was for the next 2 years, we're able to, even inside of our own home state, write off about 100% of business meetings and such, as well as gratuity. Is there any other little hidden gems that may help either small, mid-sized businesses that were in some of these plans that came out?
Yeah, so that's the kind of the biggest one in terms of adjusting tax deductibility. I will say, just from advice around these laws, if you can get anything from it, take it, because it's mostly business owners who are going to be footing this tax bill down the line, or high income earners. Yeah. So that's the biggest piece of advice I can give around the CARES Act. There's in the new stuff that's coming through. There's a whole new 1.9 trillion coming now that Biden's in office that he wants to put together and push through. That's going to raise the minimum wage to $15, among other things. So whatever you can get your hands on, get it. And so that's what I would say. That's the biggest in terms of like fun little advances in tax deductions. That's the only one that I'm aware of in that 5,600 pages. But yeah, take advantage of it.
What are your thoughts on this $15 an hour federal minimum wage?
I'm not an economist, so I won't get too into it in terms of what its net effect is on the economy and low wage workers and all of that. But, I know my mom owns a children's clothing store, and there's not a lot of margin there. And so if she's got to increase all of her wages by 20% or 30%, it's got to come from somewhere. It's either going to be she decides to shut her doors because she's working for free, because or clothing prices are going to go up. So and that's kind of a very high simplistic view of it, but because I'm not an economist and that's not my area of expertise, but math is math, and so it's gonna give somewhere.
And your mom has a clothing store here in California too?
Yeah. So thankfully, in California, we're already almost there anyways.
Right.
It's like now $14. So
thinking, what are they going to do in the smaller states?
Going from, and they're looking at getting rid of the tipped minimum wage too. So like some states, it's $3 an hour plus tips.
Right.
And so if you jump that as a restaurant for $12 an hour times your 100 employees working, 30 hours a week, that's a big old increase in cost. And restaurants have a razor thin margin as it is. And their costs are, their food prices are based on razor thin margins. So if you increase their cost by 80%, what do you think is going to happen?
Yeah.
So,
well, actually, for selfish reasons, that's great for me because I help run a company that installs self-service kiosks into restaurants. So, I mean, I guess that's a good thing for me, but terrible for people.
Yeah, exactly.
That's where I see a lot of automation and a lot of self-serve coming into effect. So turn around.
We're already almost there. I mean,
Yep, it's that tipping point for the big corporations. Like
like COVID was a tipping point for remote work, so I could see the minimum wage hike being a tipping point for robots.
Yeah, I'd like to dive a bit further into your book. What motivated you to write this? A little bit about the table of contents, so that we can share this with our audience because it's going to be amazing. I want one right now.
Yeah. So what motivated me to write it is just working with business owners. We were working, our kind of main bread and butter for the longest time is just save on taxes. And as we really started growing and working with more and more business owners, we realized that yes, tax savings is huge and critical and a major value add, but it's really just one component of the overall mission that we have to help small business owners succeed. And so while almost no one, as we talked about earlier, F- on people looking at tax planning, is just as equal on the F- on actually monitoring the metrics that matter in their business.
And people just suck at business.
It's I think it's, what's the stat? 80% of businesses fail in the first 5 years, and then 94% after 10. Yep. And that's why. And Tony hammers this home at Business Mastery and says, the number one reason that many businesses fail is because they don't know their numbers. They see the top line revenue growth happening and they think they got a full tank of gas when they're really running on empty on fumes. Right. And so the purpose of this book is to really highlight those habits that you need to start doing, whether it's do it yourself if you're just getting off the ground and every dollar matters, or hire a professional to do that. And so it's things like monitoring your cash flow. So you should have every month, you should do a cash flow forecast, both for the next month and for a rolling 12 months. So what's coming over the next year? And there's some incredible tools and technologies that we utilize at our firm that allow you to do that and plug in the estimated cost of a hire. And so when you hire someone, how's that going to dip your cash? Most people just say, I think we need someone, we feel busy, let's hire them. I don't know if we can afford them or not, So looking at your cash flow, making sure you have cash reserves in your bank account to weather a storm. The Warren Buffett quote, when the tide goes out, you find out who's not wearing any pants. And that's what happened in COVID. I don't know if that's the exact quote, but that's the general spirit.
Yeah.
That's what happened in the last year. And that's why a lot of business owners went out of business. And so the ones who had cash reserves and were monitoring their cash, which is why Cash Flow and Grow is the business, those businesses those businesses who did that are now crushing it this year because their competition's all out of business.
Yeah.
Mm-hmm. The other thing is actually monitoring and measuring the metrics that really drive and move the needle on your business. So it's having key performance indicators, or KPIs. Every business has 3 to 5 numbers that if you obsess on making them the best in your industry, your business is going to explode. And so that's so I talk through how to identify those in the book. But it's really, one big thing is it needs to be leading indicators, not lagging indicators. And that means, so let's say you want to lose weight. You want to lose 10, your quarantine 15 put on. You don't focus on what's on the scale. You focus on what are you putting in your mouth and how much are you exercising. Top line revenue is what's on the scale. And that's what almost everyone focuses on. They're not focusing on if you want to have so much money in the bank, let's reverse engineer it. How many phone calls do we need to make per day on the leads? What does our turnaround time need to be if we're delivering a product or a service? How many days of sales is sitting in inventory that we can we can free up because we have way more inventory than our competitors? So it's setting those metrics that really, really matter, and they're going to help you obsess about it and move the needle. And then once you've got those metrics figured out, it's like I said, if you can be the best in your industry at those 3 to 5 numbers, you're going to crush it. So how do you know what the best in your industry are doing? And so it's taking a look at industry benchmarking analysis, which you can get from a number of sources. We have tools that do it. And then usually like any sort of trade publication will have it. But you pull industry averages based on a company of your size in your industry. And then you compare your numbers and see how you're doing. And then you say, okay, I'm way behind. I'm spending way too much on labor. I'm not spending enough on marketing for what I want to grow. And you might have numbers that are underperforming, and that's okay. You just want to look at why. Like, for example, our percentage of compared to revenue, the amount of dollars we spend on marketing is astronomical compared to most CPA firms, because most CPA firms don't spend money on marketing.
Sure.
But the average CPA firm growth in 2020 was 4.4%, and ours was 95.4%. So I'm okay spending a few more bucks in marketing. So yeah, you got to look at what are the numbers? Is that okay, and why? And so, but if you don't look at the numbers first, then you're just flying blind. It's like it's your instrument panel, and so you have all these on a dashboard using dashboard software, and you can get it super cheap these days. And you have your dials that show if you're red, you're yellow, or you're green, and you really look at the numbers that matter. And if you obsess on those, then you're going to have a ton of money in the bank account, and your business will explode.
I think it's like something Costco figured out. It's like they pay their people like 3 times more than Walmart, but per each employee, they're getting much more in revenue.
Yeah. So like revenue per employee is a great KPI to look at.
Mm-hmm. Revenue per employee. And Costco is able to take an L on the hot dogs because they understand that
the membership fees. Yeah, they make zero on all this toilet paper sales they've had over the last year.
Yeah, well, I think Costco's strategy with the hot dogs is they don't want to raise the price because they want you to leave with the perception that Costco provides amazing value, and that's when you walk out with that $1.50 hot dog and
gotcha. Yeah.
Fill yourself up with sodium. But they
yeah. So you can come back and buy the discount wholesale heartburn medicine, right?
There you go. Perfect. That's the close of the loop.
Yeah.
Wow. So much.
So here's a couple of little things. So a prior guest that we had on the line, another Arete OG here, Rondy Lambeth. So that man has written off a whole lot, and he just loves doing it with his Jeep, his Ferrari, his RV, all kinds of things. So, and he goes the course of purchasing it versus a lot of people that tend to lease things. You know, what would be kind of like your opinion on something like that? And then the best strategy is to do that maybe through the company to cut back on some of those costs, or
like hit this jet cost effectively as well.
Yeah, there you go.
Yeah, maybe like Grant Cardone, you know, trying to save on $19 million, so he bought a jet.
Yeah. So the common misconception is, well, if I lease it, I get to deduct the full payment. Well, when you buy it, you get to do that too. It's just called something different. It's called depreciation expense. Mm-hmm. So, and usually if you look at lease deals versus buying deals, purchase deals, leases are terrible financial decisions. And so it's the what's called imputed interest rate of the contract on that. And then like the buyout at the end and the penalties if you drive too much, you know, $1 a mile over the lease miles. And so we're a big proponent of buying it. You're just going to get a better deal. And you get the equal tax deduction and you're going to get a better deal. And you never want to spend more money just to save on taxes, because that's like buying something saying you can't afford not to buy it because it's 35% off at Best Buy.
Sure.
You know? And so big fan of buying over leasing. And then the second part was, buying the business name or personal name. So it actually doesn't matter. So you can buy it in your personal name. Usually people, especially when they're just getting started, have more personal credit than business credit. So you can get a better loan, lower interest rate, you buy it personally. And then you can contribute it to the business, pay all the payments out of your business, get the same deduction. And it actually doesn't count against your debt to income ratio if you're going to try to borrow, as long as you can prove it's always paid out of business. And so, and then a loan in your name that you contribute to the business gives you what's called basis in the company. So you can, if you have a loss in the business, you can take it. Whereas if you take a loss in excess of basis, then it's suspended, meaning you can't take the deduction. And this is getting into a little bit more like kind of
keep it going
topics. So I'll just breeze over it real quick. But a loan in the business name does not give you basis. And that matters in an S corporation because any money that you take out of the business where it's a loss in excess of basis, you pay capital gains tax on that. So if you contribute it to the business in your personal name, then you get basis for that. So in most cases, we just tell people to buy it in their personal name because they can get a better interest rate and it gives them more basis in the company.
And again, the biggest lesson I want everyone to take away from this episode is you don't have to remember all this stuff. You just have to find people like Tyler who can remember this shit for you.
That's right.
There's a reason why you want to have a good CPA, good legal representation, because you're not going to become an attorney, probably, and you're not going to read all 5,600 pages of the tax code, hopefully.
Or just do an update to it.
Yeah.
Yeah, right. That's just the update, huh?
That's just the update. And to be fair, I haven't read the full 5,600 pages either.
You got that scheduled for next week, I know.
That's right. Yeah, that's tonight when I feel like I can't go to sleep. So
yeah, who needs Netflix? You got tax code, right?
Yeah.
But I mean, taxes is like Robert Kiyosaki says, it's the biggest expense you are ever going to pay in your life. Yet 99% of people, because maybe they are intimidated or their eyes glaze over, kind of just bury their head in the sand, which is not a very effective strategy. I've come to learn.
It's a very expensive strategy.
Yeah.
So here's just a quick little answer. I know we're coming up on time, so we want to end with our signature question, but here's a quick one. So like someone just going into, like, let's say they're just coming from, the W-2 lifestyle, they're going into a business and they're experiencing, obviously Uncle Sam wants their cut. They're unaware of a lot of the advantages they can do. What are some of the quick surface level advantages they can implement to start saving and maybe cut a little back on what they're giving Uncle Sam?
Yeah. So the best tax tip I can give, and the number one thing you can do to lower your tax bill, especially when you're first starting out, isn't something sexy like rent your home out to your company. It's keep an accurate, up-to-date set of books. Because most people, when they're just getting started out, they fill out their tax return using what I call the 3 zeros expenses method, meaning every expense ends in 3 zeros. Oh, I think I spent about $6,000 on office supplies. I think I spent about $2,000 on fuel.
I feel attacked.
And so guaranteed you're missing deductions if you're doing that. So having a set of books where you're reconciling your account and analyzing your personal expenses to say what expenses am I paying out of my personal account that I could put in the business, like my cell phone bill, like my internet, like my car payment, car insurance, fuel, all into the business account, is going to be the first and best thing you can do to make sure that you're keeping as much as possible from Uncle Sam without really, before you meet with the professional. You still want to meet with an accountant as soon as possible that can get you started right away. But just doing that from ground zero and having a separate business bank account instead of intermingling it with your personal is going to go miles in doing that.
God, you sound like my mom.
So someone just getting into something like that, obviously the paper can get overwhelming. What is the best way to track something like that, maybe digitally, as well as obviously just having it filed away as paper, just to make sure that you got yourself covered?
Yeah. So easiest thing is go get a QuickBooks Online subscription, go get a separate business bank account and a business credit card, and link those up, and just start, take 2 minutes with your morning coffee every morning and click import bank feeds, and it'll keep, it'll auto categorize, and sometimes they'll do it wrong. So you got to change those. But if you just do it in 5-minute chunks, it's easier by the bottle than by the keg. So instead of waiting until tax time and you got it, or, you're launching your business for 2 years and you haven't filed for 3, and then you're trying to recreate everything from the last couple of years and you have no idea if that Chili's meal was, business or for pleasure, if you were having margaritas or a business lunch. And, so doing it from day one and just a few minutes each day and import and update is going to make it so much easier.
Awesome.
So right. Fine, Mom. Fine. Tyler, man, this episode is fucking money. We appreciate you being on, but we got one more question before we let you go. This is our signature question that we like to end with, being that we are the Dedication to Excellence podcast. In your own words, what does it mean to live a life in dedication to excellence?
That is an excellent question.
Ah.
I think it's about constantly pushing the boundaries of what you think you can do, even when you're tired of doing it. When you're growing and trying to push things, it's always easy to just start coasting. And so it takes things like joining like RTA groups and finding people that are going to push you and not stopping to just say, okay, enough's enough. And I look at, like Tony says, proximity is power. It is true. Getting close to someone like him, he's 60, he's going to be 61 years old next week. And he is, what he did with the pivot to the virtual events, and he's still pushing the limits. And when I get texts from him, it's usually 2 a.m. my time, and he's on the East Coast. So and he's just going to bed, and he's 61. And so a life of excellence to me means constantly pushing that next level and never letting enough be enough.
Tyler, I got to tell you, man, if this whole CPA thing doesn't work out, I think you got a future as the up and coming next Tony Robbins, speaking on stage, is continuing to crush it, brother.
Well, I appreciate that. Thank you.
Of course, my man. So, I appreciate you being on. And guys, if you haven't made the case already to buy the book, you just haven't been paying attention, because there was heat dropped on this episode. So where can people follow you? And of course, where can people buy the book?
Yeah, so the book will be on Amazon early February, and then as far as follow me, if they want to go to Instagram, it's just @Tyler McBroom. Also, I do a little more deeper dive tax tips on YouTube. It's just YouTube/Tyler McBroom, but I'm most active on Instagram, and I'll be definitely making announcements when that book's available. So
if you got an Apple, check them out on Clubhouse.
Yes,
I've been
Clubhouse
seeing you in there.
Yeah, that's starting to get worked into the routine now.
Yep.
Let's go. Well, I'm looking forward to my autographed copy of the book. And man, my wheels are turning right now with just all this information. But hey, again, brother, appreciate you for taking the time to swing by. I hope everyone listening, I know you got tons of value out of this. Look, at the end of the day, again, it's not about fully understanding everything going on, but you do definitely want to have people on your team like Tyler who can understand this stuff for you. So with that wraps up another episode of the Dedication to Excellence podcast. Y'all stay blessed. If you like what you hear, please leave us a review. Tell a friend. We grow by your grace. And we will holla at you on the next episode. Peace.